no matter how much of a anti-establishment, kind of anarchist entrepreneur you are in the beginning, and you want to take down the man, if you are successful, you ultimately become the man.
I'm Tor Bear from Enigma. Welcome to Decentralize This. Hello, and welcome to yet another episode of Decentralize This, presented by Enigma. I am Tor Bear, I'm the head of growth for Enigma, and today our guest is Anthony Pompliano, also known as Pomp. Anthony is a founder and partner at Morgan Creek Digital Assets, which is an investment firm that provides access to blockchain technology and digital assets for institutional clients, as well as wealthy family offices. So they're really trying to get the traditional financial world on board with these new products and technologies. And as a result, Anthony does a lot of speaking, a lot of writing, and he even hosts his own very successful podcast. I hear those are really cool now. So anyway, we're going to talk about Anthony's journey to his present role, from the military to his time at Facebook to his VC firm, Full Tilt Capital, and now to the present at Morgan Creek. We discuss how to have a growth mindset in the decentralization space, what we can learn and not learn from companies like Facebook, how to design growth loops, and we also talk for a while about his pinned message on Twitter, which I think is really interesting. Anthony does tweet a lot. You can follow him at @Pompliano. He's a very insightful guy, and moreover, he is humble and he is patient, which are both really critical traits, in my opinion, if you want to build our decentralized future. So, without any further introduction, here is Anthony Pompliano. Anthony Pompliano, welcome to the 5th episode of Decentralize This. It is a pleasure to have you.
No, thank you so much for having me. I'm excited.
Awesome. So let's get right into it. I ask every guest when they come on, just first thing we do, personally, professionally, who are you, Anthony?
Wow. I am a brother, boyfriend, son, friend, etc. to as many people as possible. And just generally a human who enjoys life, frankly.
I like it. So let's focus maybe more on the professional side. We're going to trace back your history a little bit. We have a few things in common, you and I. We have a lot more that's not in common. We'll get to talk about both. But before we talk about anything like projects or companies like you're personally invested in, because right now you're on the investment side with the blockchain, decentralization, crypto space, correct?
I am.
So before we get into any of that, I want to help listeners who might not know you get into your head a bit, because I think the thinking behind your approach to investing in the decentralization and blockchain space is really interesting. I think it's worth understanding your background to see how you got here, how you got to the approach you currently have. So we don't have to start at the beginning, right? We'll start a little bit afterwards, but let's maybe talk about what were you doing right out of school?
Yeah, so actually in the middle of college got deployed overseas. I spent 6.5 years in the Army and did a deployment to Iraq. And then I went back to school as I was finishing up, I ended up starting a business.
How long were you over there?
13 months.
Man, what do you think? Was it surprising? Like, was it what you expected, or was it really like a perspective shifting experience for you?
I went at the best time I could. I was 20 years old when I went, and I turned 21 in the middle of the desert, and I was just young enough to probably not care about a lot of things that sucked or were not fun, and was luckily surrounded by a lot of guys who they made sure that I had my head on straight and kind of kept myself out of trouble, because the downside of being a 20-year-old at war is you think you're invincible. So it was a good combination of people I was with, and then kind of the timing that I went. So it was a overall net positive experience, where I learned a lot.
What do you think is the biggest thing you brought back with you? Because a lot of people will go through those kind of extremely high stakes experiences, and it'll really change a lot of things about their outlook. And then for some people, it leaves them very pessimistic. For other people, it gives them, I think, like this really, at least from the people I've met who've done deployments, it's given them this innate drive towards some sort of higher calling or greater good.
Yeah, I think that I definitely didn't walk away with any pessimism. I think you kind of get it all out there. But the thing I probably walked away most is just, look, we're all going to die, right? And I think when I came back, I said, I'm going to go have as much fun as I, can possibly do in one lifetime and just go do some epic shit. So have hopefully been kind of doing that since then.
Okay, so let's go right to the next phase of life, right? You've come back from the deployment. You're back in school at this point, right? What happens? Yep. What happens next?
So I played football in college, and so being able to transition back from the military into kind of a college football team, there's a lot of similarities in terms of small groups, all male, so kind of violent or violence related was all I think helpful in kind of the transition back, and probably helped with a lot of the avoiding of the PTSD and things like that a number of other people have suffered from, and then from there. It was, what else can I do? All of a sudden, the party on Friday night isn't the most important thing anymore. And so, started a business in what ended up being my senior year.
What did that do?
We did online advertising for public school districts. So a lot of them, they've got high traffic on the pages that parents and students log in to check grades, assignments, etc. So we began helping them monetize that in kind of nuanced ways.
Interesting. So this sounds like that was a really relevant experience that led into what you were doing at Facebook later on.
Yeah, when I got to Facebook,
And what did you do at Facebook? Because people may not know.
Yeah, so I worked on a team where we were responsible for driving growth for Facebook pages. So if you think of Facebook pages as the business product of the company, you want to get as many businesses using that product because in order to become an advertiser, you need to have a Facebook page. And so started out with a team of 8 people. We eventually grew it to quite a number of people, and our goal was to just drive that weekly active page number, and ultimately we learned a lot along the way, and we're quite successful in doing so.
Facebook is a very growth-driven company. It has been since its inception. I think the way they put it was sort of like growth at all costs, very very land grabby.
Yeah, I think that I was there in a very unique time where the company had grown quite quickly to date. It was just starting to kind of become self-aware to some degree. So we started thinking about
Facebook became self-aware.
I think that we wanted to make sure that the things that we were doing were having a positive impact in the world, right? And so I went from running that growth team for Facebook pages to then a number of initiatives that were more focused on kind of creating a positive impact. Things like the Amber Alert system, voter registration, places where we weren't worried about driving money or revenue. We just wanted to kind of have that positive impact, and I think we built products that serve that purpose.
Yeah, and if you ask Facebook now, they'll say that was their legacy, right? They've built these systems, they've brought people together. There was the groups product. I think the Facebook groups product is really wonderful in a lot of ways. But, as you must know, having worked there and having this background a bit in advertising and everything else, you know that it's also created some downstream effects that maybe were unintentional. Because that's kind of what growth does, I guess, is like it's one of those things where once you start prioritizing for it, it's not always something that you control. It sort of starts to take on a life of its own.
Yeah, I think that I would argue, that Facebook specifically as a company, the mission is and was at the time to connect the world, right? We wanted to help make sure that every single person in the world could get connected to any other person in the world. And the belief, that I had held then, and I still believe today, is, that's a net positive impact on the world. So, are there potential negative impacts of that? Sure, right?
Right.
I think that they're, pretty far and few between, and I tend to think that it's a net positive. And so it was, exciting time to go to work every day, and try to, drive us closer to that mission. Obviously, the company today's got, over 2 billion people, almost a third of the world, using the product on a monthly basis. And so I would argue, there haven't been very many people on the internet who've been more successful in that company in doing so.
So let me talk about a parallel quickly to what I'm seeing in the decentralization space, right? Which is you've got this new technology. It's not perfectly understood even by the people that created it. It's growing, right? Like this is still a technology that's growing and it's evolving. People want to make projections of where it's going. They're not sure. Some people say it's going to have tremendous positive impact on the world, because now suddenly we're democratizing finance and access to banking systems. Like if you're somebody in Venezuela, like good thing we have Bitcoin, like if you're talking about remittances, like it's fixing a lot of issues we have with our centralized banking system. On the other hand, there can be a downside to the rapid expansion and proliferation of new technologies that aren't necessarily well understood, aren't well regulated. We're already seeing some of that complexity play out. And we'll get to talk about it more. I'm just drawing that parallel here because this is when we start talking about your move from Facebook and this like traditional companies into something a little more future thinking, I guess. So can you talk about Full Tilt Capital? Because I know you did a few things in between. But let's talk about that, because I think that's when you've really got into investing on your own versus running these kinds of growth teams.
Yeah, look, I think that, I started Full Tilt Capital with my partner, Jason Williams. Our belief was that there was a whole host of entrepreneurs who wanted to start companies or were already starting companies that wanted capital early on. They needed help early on. And they were doing so at a time where, I think kind of the Silicon Valley narrative was, we'll just go raise friends and family first. And we fundamentally believed that, and still today, that not every single person has friends and family that can give them a couple $100,000. Right. And so we set out to, professionalize a little bit that friends and family round. And ultimately ended up investing in about 64, 65 companies.
Wow.
And that portfolio and those companies have done incredibly well. And so I think that, we kind of validated that thesis of investing.
So what happened after that? Because it sounds like, you had a thesis, you executed on that thesis, you got to spread this capital around. But now you're doing something a little bit different, I think, with Morgan Creek.
Yeah, we had been doing a bunch of investing, kind of professionally. At the same time, personally, we were beginning to really look into the cryptocurrency space. Jason and I had built a number of cryptocurrency mining facilities. We had some unique power opportunities that made that attractive. And then on top of that, we started to see more talent flow into the space. And so we decided to dedicate our second fund solely to buying equity in infrastructure companies in the space. And as we started going down that path, we realized that there was an opportunity to deploy a lot more money than we had originally thought. But we realized that we probably weren't going to raise that capital as two guys working out of a coffee shop. And so ultimately we sold the management company of Full Tilt to Morgan Creek Capital, multi-billion-dollar asset manager based in the U.S. And we've teamed up with them to build out a digital business where we can leverage all of their back office kind of core infrastructure platform, regulatory licensing, compliance, sales and marketing, relationships, etc. But we can go build an investment team that is focused on this digital age And hopefully, it's a scenario where 1 + 1 = 3 or 4.
Awesome. So I want to talk now about bringing things back to growth, right? Like now we've gotten to the present day at Morgan Creek, but I want to talk about maybe your mindset around this. So the one thing that you and I have in common, growth is in my title now, right? I'm the head of growth at Enigma. I've worked on growth before. I've worked on the growth team at Snapchat, where I know you were also, if briefly, but another company that was very concerned with growth and expanding an ecosystem and thought the same way. It's like, oh, if we can connect the world and bring meaning to that communication, this is valuable. We should just do it. Whether they did it correctly or not is not the subject of this podcast, because I think they could have improved on a lot of things. But it did give me a deep appreciation for why a growth mindset is so important, regardless of what space you're in. And specifically this idea of growth loops. And in my mind, a growth loop is something where you've set up a system. There's something you're measuring within that system. Usually it's adoption, or maybe it's usage. And the way that you've set up the system, people in the system can recruit more users into that system, or it creates more usage in that system. And it becomes self-sustaining. And setting up these kind of growth loops is critical to the success of any kind of product, any kind of platform. Social companies got that very early and sort of set the standard for everything. It's why we have Facebook and we don't really have Google+. Now Google+ has been completely shut down. It started nominally with a bigger user base. They didn't set up the growth loop, not the way that they should have. So I want to talk about growth loops because, first of all, do you sort of see the same thing? Like, do you believe in this concept of setting up growth loops and creating systems that can become self-sustaining? And second, how might you see these growth loops and this growth thinking, system thinking, applying itself in the blockchain space and in decentralized technologies and crypto?
Yeah, I think that every single great company has figured out how to incentivize users or customers to value what they've created, right? And so whether that's they're paying for it, they're recruiting other users, there's a whole bunch of different models or frameworks you can use to figure that out. But ultimately, that's what valuable technology has done. And so I'm on record as saying the people who figured out growth hacking or incentives in the centralized world won very big, but the people who figured this out in the decentralized world will win magnitudes more, right? And the reason being that in the decentralized world, it's more global, right? And also the incentives are much stronger. So if you look at the Bitcoin blockchain or the Bitcoin network, for example, most people would try to figure out how do we get people who use Bitcoin to then incentivize or invite other people to use Bitcoin. Mm-hmm. Well, the Bitcoin network figured out how to do it without anybody else's help, right? There's an incentive system in the block reward. And so there's unique things that come in the decentralized world or the cryptocurrency blockchain world that just weren't previously explored or used in the centralized world. And so I think that, that's part of the beauty of all this is you take people who understand growth, who understand how to measure this stuff, how they understand, kind of what's worked and what hasn't worked previously, and you give them a whole new set of tools and a wider audience to go after. And I think that we're going to see some really incredible things built over the years.
So some of these growth loops to me are healthy, right? Especially if you're trying to scale something like the Bitcoin ecosystem or the Ethereum ecosystem. You could argue that some of these growth loops are self-sustaining and will continue to sustain those ecosystems and maybe the growth of the token that underlies it. Other things seem more like pyramid schemes. And we've had some examples in the crypto space of things that grew very rapidly and collapsed under their own weight. They were obviously based on incentive models, and pretty well documented incentive models that go back centuries. Pyramid schemes have been a thing forever. And then some people figured out how to codify it in token form. What do you think of like the potential for some of these systems? Because some of them are very legit, right? And they're self-sustaining. Then some of these things are growing, but then they're collapsing. I'm way more interested in building sustainable decentralized systems. A lot of these decentralized systems I'm seeing don't appear to be sustainable. What do you think is the difference? Like, what does it take to build a sustainable decentralized system versus something that's just going to grow and then collapse?
Yeah, I think there's two things, right? So one is incentives inherently are not good or bad, right? They just exist. What you are incentivizing somebody to do or the overall design of the system can be good or bad, but the individual incentive itself is not good or bad. So I think we've got to separate those two things. The second thing is on the system design, there's kind of two ways I look at it, right? So if you go into the bad category, there's either nefarious design or there is unsustainable design, right? And nefarious design is just scams, frauds, Ponzi schemes, the whole nine yards. And those are relatively easy to pick out, should be enforced on, and just will not last, right? The harder problem is the unsustainable design. And on the unsustainable design side, I think what you get is a lot of people who are new to growth or trying to acquire users, for example, what they end up doing is they end up focusing on the wrong metrics or the wrong levers, right? A common mistake is people just focus on how do I get as many people to download my mobile app as possible, right, in the centralized world. And so if I just get a bunch of downloads, then I'm growing. Well, a sophisticated team would not necessarily start with the download number. Instead, they would look at what is our retained engaged user base, and what is that pace of growth of that cohort over time, right? Because I actually don't care how many people download my app. I want to know how many people download my app, stick around, and continue to use it on a relatively frequent basis. Because those are the most important people. And so just shifting the metrics that you use or pay attention to can drastically change the efficacy of a system. And then two, I think is, really being able to identify why is somebody using this, right? So how do you make a system sustainable? You have to provide value, right? And so, the Ponzi schemes, et cetera, they only last for so long. And so until you stop giving the value. And so I think that, in the decentralized world, again, people who understand incentives, people who are able to use these tokens and other, pieces of the tools, I think could build massive companies and massive networks that we've just never seen before. But it's going to take folks who really understand, kind of network effects and K coefficients and design and incentives and all that kind of stuff in order to be successful.
Some of these systems are pretty complex, right? It's not just like a two-sided marketplace. Like if we take Bitcoin, you've got the people who are trying to transact with Bitcoin. Then you have the people who are actually running the nodes themselves and mining Bitcoin. But it does really go way deeper than that if you look at the incentive structures, because in a perfect world, right? Like maybe if you treat Bitcoin as an academic project, these incentives are not very complex. If you can make more money mining than you're paying in electricity costs, you'll keep doing it potentially. But there's also now regulatory influence, and there's mining pools, and there's all these exterior pressures and forces acting on the space, as well as ways for people to sort of collude or collaborate even within these incentive networks. Do you think that people really understand the effects? Like, because we're now starting to talk about a very complex system. Do you think we have a good understanding yet of how all of these forces are interacting, even in our biggest decentralized systems like Bitcoin, let's say? Let's focus on like blockchain-based ones.
Yeah, absolutely not. Right. I think that's okay as well. So just because we don't understand something doesn't mean we shouldn't build it. I think that we just need to be self-aware that there's things we don't understand, and we should actively try to learn as we're going. But, part of learning is experimentation. And I think that's, kind of the stage we're at here is there's all kinds of new tools available to entrepreneurs and developers. And by allowing them the ability and encouraging them to experiment, I think that we will innovate faster and we'll kind of more quickly figure out what is going to work in the decentralized world, and then everyone else will go use it, right? But the people who figure that out first are going to have a massive advantage.
So let's talk about like local versus global maxima, maybe, right? Because if we're talking about growth, a lot of the time is an optimization problem. You're saying we need to pick the right metrics, figure out what's really valuable, and optimize for those. Sometimes you're just going to get stuck, and you're not going to grow past a certain threshold unless you make some sort of major change to the incentive model or to the technological infrastructure.
So when I look at the state of decentralized applications or things like that now, I wonder to myself, maybe it's because of the tech stack, maybe it's because of usability concerns. I worry that we're going to keep bumping into these local maxima of adoption. And I don't know how big that threshold is. I don't know if it's, a few thousand users. I don't know if it's a few tens of thousands. I want to ask you, what do you think are the real barriers towards getting like millions of people using these technologies? Like what stands between us and actually getting things to that scale?
Well, I think you start in phases, right? And so there's already people, millions of people using crypto or cryptocurrency. Now they happen to be using it for speculation, right? So that's kind of a easy, unsustainable use case. And over time, hopefully it goes to more sustainable use cases. But I'm less worried about, how do we get millions of people? I think the more important thing is how do we get 100 people to use something, love it, and really interact in a model that is sustainable. Because once we figure out how to get 100 people to do that, to get from 100 to a couple million will be very easy, right? I think right now what we have is we've got systems that are designed to not quite be sustainable or to really get kind of mass consumers interested, even if it's just 100 of them. And so before you can scale, you got to figure out kind of what that that product market fit or that user product fit is really before, you're prepared for takeoff, if you will.
I'm worried that, speaking specifically about decentralized tech now, right? I'm worried that we've already got a few hundred people who are really dedicated to this space and the Bitcoin development community, the Ethereum development community are very dedicated to these ecosystems. And there's not a lot of them, and they're early adopters and very technically savvy. I don't know that it scales so easily from those kinds of hundreds of people into the millions of people. So the early use cases we're seeing seem to be optimized for these early adopters, but maybe not so much for a broad audience that could include millions of adopters. And that's why Vitalik says things like, we haven't, banked the unbanked. We haven't really done all these things that we said that cryptocurrency could do just yet. It still seems like it's been optimized for developers. Do you have any concern around that, or how would we still move from that core audience to this to growing into the millions, as you said?
Yeah, look, I think there's a lot of people who disagree with this, but I don't count the developers in an ecosystem as the users in that ecosystem, right? The developers are using it because they need to for their job or their kind of interest in building the ecosystem. What I'm more interested in is somebody who doesn't understand any technology whatsoever. How do we get 100 kind of normal mainstream users, right? And until you do that, that means that either the technology doesn't work, it's not attractive, right? It doesn't make something easier, faster, cheaper, etc., or they don't understand how to interact with it, meaning that the design and both from a visual standpoint and a user design standpoint isn't up to par, right? And I think that's a multi-layer problem or a multi-dimensional problem. And so it's going to take not just developers to fix that, but I think you need kind of the whole host of skill sets and experiences at the table. And I just, I continue to tell people I think Bitcoin is the most viral product. I think Bitcoin is the most usable product. And I tend to think that Bitcoin has the best chance to remain kind of king, if you will, in the decentralized world, because at the core, what they figured out is they figured out the incentive model to scale on a global basis. And, there will be other products that figure that out as well. But Bitcoin today is the one that is just so obvious to me, and I have strong conviction it will continue to be in the future.
This is a great segue into how I'd like to structure the second half of this conversation, because first of all, I want to acknowledge that you're a prolific tweeter. Do you know how many followers you have?
Too many.
Too many. That seems correct. I can't imagine having that kind of an audience. But you know what? You tweet a lot of insightful things. People tend to hang on your every word. And the first ones that they see when they land on your Twitter page, you have a pinned message. I'm going to read it to you. I'm sure you know it, but it says, "My rules of business: build shit people want, never give up, avoid assholes, question assumptions, learn new ideas, and always reward ambition. I think that's pretty cool. But now I'm going to force you to walk through all the components of that, because I think each of those things that you say is super interesting when applied specifically to thinking about decentralized tech. First of all, starting with build shit people want. What do you think people want right now in this space? What do they want? Do they want decentralized applications? Do they want new types of payments infrastructure? Or are you thinking more like there's a job they want to do, like the job to do thinking? Like, what do people want? What should we build?
I don't think it's actually any of that. I kind of go as far away from the technology layer as I can. I think of this from a psychological standpoint, right? And the easiest examples in the financial industry, I think people want better banking. And that is, incorporates a whole host of things from, retail bank accounts to how they access credit and debt to how they make investments. I mean, there's a bunch of stuff that's incorporated there. But ultimately, I think that's what people want. And so if you can build a better financial system or a better banking system, ultimately you will attract a very high percentage of the people involved in the financial system or the current financial system. The problem is that everyone is trying to build the decentralized financial system or the, X financial system or the Y financial system. None of that matters to the mainstream audience. All they want is something that is better. And they're not going to be able to tell you what better is. And so I think that's where people have to start with is, can we build a better product, a better service than what is currently there? I tend to think that decentralization will play a major role in that. I tend to think that technologies like blockchain will play a major role in that. But I think that when we get into the weeds of like, we have to build something decentralized, we have to build a blockchain X product, it just takes away from what people want, and ultimately all they want is something that is better than what they have.
I tweeted something the other day kind of relevant to that. I said that decentralization as a movement, right, it's not new. And it's definitely like the concept of it is not let's find a way to use a blockchain, or at least it shouldn't be. But I see a lot of that now. It's people looking at blockchain and saying, we've got this new thing. What else can it solve? I feel like you would agree with me in saying like, that's not a healthy way to approach this problem, and it's not a great way to find something that can grow sustainably.
Yeah, it is. It's a hammer looking for a nail, and that's usually not a good situation.
So that leads me into another part of your tweet where you say question assumptions. So what do you think are bad assumptions that people are making in the blockchain space that you think would be the highest leverage assumptions to destroy right now on this podcast?
I think the number one assumption that people have that I disagree with, I think a lot of people believe the most valuable things will end up being the shiniest, sexiest, most complex, things created by the people who appear the smartest. And I actually believe that ultimately value will accrue to the simplest, most powerful ideas. And so, I think we've seen that with Bitcoin, for example. I think we'll continue to see that where, the people who want to come up with the, 6 token model with the Web3 stack that's, run on blah, blah, maybe. But I tend to think that, the great innovations come not from the kind of complexity or the robustness of an idea, but they tend to be simple ideas that are overly well executed. And so those are the teams that, get me excited. Those are the teams that I think really got, it figured out. And ultimately, those are the teams I think they're going to build all the value.
Maybe specifically, what do you think about like something like stablecoins? Because you seem to be talking about things that's like you don't like things with like way too many moving parts necessarily that are overcomplicating what could be a simple issue. What do you think about like that technology? Just to be specific for a second.
Yeah, I tend to think that there are plenty of nuanced use cases for a stablecoin, right? But what I remind people is the best stablecoin in the world is the US dollar. the US dollar is a digital currency. 92% of the money supply is not in physical paper or coins. And so it is the most stable, it is the most secure, right? And it is a digital currency. And so anything that you are going to create that is going to compete with the US dollar stablecoin, you are going to need to build in a better way. And in certain situations, there are use cases for a decentralized or a crypto-based stablecoin. But I don't think that the opportunity, as people are approaching it today, is nearly as big as I think that most would guess. My take on it is the stablecoin itself is probably less interesting than the ways people are trying to create stability. Right. So if you take, certain projects that are using, algorithms or pegs or, whatever they're doing, that the innovation there is probably much, much more interesting than just the access or ability to leverage a stablecoin.
Mm-hmm. And stablecoins are interesting in the context of growth because with a stablecoin, the whole stated goal is to increase access and increase adoption of the stablecoin, but not to grow the value, or at least the nominal USD value of the stablecoin, which if you look at a lot of maybe token-based projects, they don't say anything like that. There is the potential that the value of this underlying digital asset could continue to grow. And stablecoins have this whole complex model set out where that's not what they're optimizing for at all. Can something like that in your mind grow relative to something like Bitcoin?
Yeah, I think that, in crypto specifically, you would be crazy to say something will never happen. Right. I mean, all kinds of wild stuff can happen. But I think that, it's more about probability. Right. A friend of mine, Ken Seif, he's got this saying that he's looking to invest in things that are possible, not probable. For me, it's, a lot of times when people are looking at these technologies, it's less about is something possible from a user perspective, and it's much more about is something probable. So investors want possible, not probable. I think users want the opposite. They want probable, not just possible.
That's an interesting perspective on it. I mean, my background besides being on the growth side of things is I used to be in derivatives trading, and all derivatives trading has ever been about is valuing the probable, valuing the possible, understanding that there's a very large difference between something that's a 60-40 proposition and a 40-60 proposition. I think in crypto, a lot of the time, we're dealing with propositions that are far more unlikely than that. And it may be that we're going to deal with a lot more like black swan type events in this space. It may be that the types of things that end up upsetting some of these new decentralized systems we're setting up are things we could not or would not have foreseen. I see a lot of, risk to this stuff. And at the same time, a lot of outsized reward because we're building things that have never existed. We're experimenting with technologies that we've never tried to implement at scale in the wild. So you're an investor now, right? You're not a user. What are you? Is this affecting the way that you're investing, knowing that the user wants something different than your average investor in this space? Because you know that a lot of these VCs coming into the space now are not looking for things that are even remotely relatively certain. They're taking crazy long shot bets on speculative technology.
I think that they're looking for the same thing. They're just looking for it at different times in the life cycle of the technology. Right. So an investor is looking for something that is possible, not probable at the earliest sign of life. And so over time, as that technology matures, it goes from possible, not probable to, still possible, a little bit more probable, and eventually gets all the way to the point where it's definitely possible because it is probable. Right. And I think that, that's when users start to become interested, is when something is probable and possible. So I think that, it is a risk return profile that just two separate groups of people looking at technology at two different points in time and is completely rational from both seats.
Maybe this is a good framework then. I'm thinking like capital, at least in this space, maybe less and less each day, but the capital doesn't seem to be the scarce resource. So investors are comfortable spreading the capital around, taking weird bets, experimenting. Users, time is still finite. And as a user, that is the resource that you have to give to these platforms. You have your own time. You're an early adopter. It takes even more of your time to adopt these platforms. Time is really scarce. There has to be tremendous value to the end user to want to commit your time. As an investor or as a venture capitalist, you might not need to understand how much time it's going to take people to adopt this. If you believe that there's value in the long term to the technology, you're not giving up your time now. You're just giving up your capital.
Yeah, I think that you can't create more time, right? And so the belief that you can trade capital for time, most people will make that trade. But again, it all comes down to the individual situation. But that framework, or trade-off between capital and time, I think is something that people face both professionally and personally on a daily basis. And they optimize for what they believe to be the best return on their investment. And that investment can be either that capital or that time.
Okay, then let's talk about one other piece of your tweet, the part where you say learn new ideas, right? We just talked about how people have scarce time. There's a ton of new ideas out there, not just in the decentralization space, but there's information overload everywhere. If somebody's trying to get into this space, either as a developer, as an investor, as a user, they've got finite time. In your mind, what's the most valuable thing they could be learning?
Asking the question of what does somebody need to learn is a pretty difficult question, because it's like saying with the internet, hey, I want to get into the internet, so what should I learn? Well, you should learn a lot of things. And my first piece of advice to people when they ask me what they should learn is to learn more about themselves, right? Because I truly believe that learning is a function of self-awareness. And so if you're interested in, finance, great. There's a whole bunch of resources as to how to, learn about the challenges finance are facing, what decentralization can do to the finance industry, both positive and negative, et cetera. But maybe you're not interested in finance at all, right? Maybe you're actually interested in the music industry. So going and understanding, blockchains and decentralization, et cetera, in the music industry is a whole different ballgame. But I think that, the one common ground that everyone should have in this space is the underlying story of how blockchain technology was invented or created. And I think what that does is it gives people historical context, and from there, they're kind of off to the races down their own rabbit hole.
That's really interesting. So that idea of a shared history, I mean, the space is very fragmented now, right? In terms of how people get their information about projects in the space, or how people get their information about like what's happening in the Bitcoin ecosystem. It's really hard to keep that alignment, right? To have these shared stories, this shared culture. Do you see this getting easier over time? Do you think we're going to keep bringing people back to like some sort of fundamental like decentralization ethos, Bitcoin ethos, or is it just going to get harder as awareness of these technologies grows to keep that alignment? I worry a lot about how we keep people collaborating in this space, because I've seen how tribal it can be.
Yeah, so I think there's a couple of components here. The most important is the longer that Bitcoin technology exists and the more important it becomes to society, the less important the origin story is, right? So, in the first 10 years, the story of Satoshi and all of that is very important. In the first 20 years, it's, a little bit less important. In the first 50 years, it's less important. And so over time, I think that stuff goes away. Now, the ethos of this is, again, it's important in the beginning because that's what draws people in. It's a way for them to stake their reputation and their mental energy on, I believe in this, right? And they get excited and they are recruited in or attracted in. But over time, I think that we're going to find, even those ethos goes away, right? And it's the whole belief that, no matter how much of a anti-establishment, kind of anarchist entrepreneur you are in the beginning, and you want to take down the man, if you are successful, you ultimately become the man. right? And so I think that we're seeing that even today with companies like Apple and Microsoft and Facebook, et cetera, is that these founders were not, kind of the man or the establishment when they started their careers. And so I think that stuff is really, really important in the beginning. But over time, we get to a point where it's just, less important. And I think that we will get, people at some point who join the ecosystem or the industry who don't even know what those original ethos were or that original story. And that's okay.
Well, I mean, it's a valuable outlook to have, just kind of understanding how things are going to change over time. And it leads me to the final question, and it can be as quick as you like, but let's just focus on the next year, right? Because we can talk 20, 50 years down the line. I know you believe in the long-term value of this technology. What do you think people should watch for in the next 12 months if you think that they are going to be looking at the most interesting thing in this space? What should they be watching out for? Where maybe it's where value is being created, maybe it's where the growth is. What should they be looking at?
Yeah, so I'm a big fan of the Bill Gates quote. You overestimate what you can do in 1 year and underestimate what you can do in 10. My guess is that one of the most significant events that is possible to happen in the next year is if news breaks that sovereign wealth funds or sovereign nations are buying Bitcoin. I really think that will cause mass chaos. I think that will cause an institutional FOMO like we've never seen before. And I think that, it'll be a pretty powerful moment in the history of crypto and blockchain. And I could see it happening in the next year or so. So I think that would be the one moment that, if that happens, I'm really interested to see kind of how all of the teams, markets, capital allocators, et cetera, react.
I think that that's a great place to leave things, because now we're all going to be watching for when it comes on the news that the sovereign wealth funds have all bought into Bitcoin. And we're starting to realize this thesis of digital gold. I think that you're right. It could be this year. And honestly, because the space is speculative, it could be that it's not Bitcoin that this happens to. We just don't know. But that's why it's exciting to work in. That's why I'm sure it excites you. To come to work in is that we're still writing the future together. And I know that with your work, you're a big part of it. So I want to thank you for coming on today and giving up so much of your time to talk about this stuff. You have your own podcast. I know I've gotten you out of your element and into my zone here, but I love your podcast. Maybe just as you're signing off, tell listeners how they can hear more of you.
Yeah, look, I appreciate it. I had a lot of fun doing this, and folks can I think they can just go to the Apple podcast store and get search Off the Chain. And I think it's available on Spotify, Google Play. The guys who helped me with it are fantastic over at Blockworks Group, and so they've got it kind of everywhere that most people listen.
You bring on some cool guests. I try to do the same. I tried to do the same today. So I hope everybody listening that you learned a bit from Anthony's conversation with me. I hope you learn more by listening to more of his stuff and checking out all the stuff that he writes about. I know he's got a newsletter too. We'll put links in the episode description so you can follow up. But Anthony, thank you for taking the time. I had a blast just hearing you talk about this stuff. It's clear you have a real passion for it.
Absolutely. Thanks for having me.
If you want to learn more about Enigma, you can visit us at www.enigma.co. You can go to our blog at blog.enigma.co. You can join our Telegram group at t.me/Enigma Project. If you're curious about anything we talked about in the podcast today, make sure you follow the links below in the episode description. Make sure to subscribe to us on YouTube or follow us on Medium so you don't miss our next awesome episode and interview. Otherwise, thank you for listening. We hope to see you next time on Decentralize This. I'm Tor Bear. Have a great day.